गुड मॉर्निंग. गुड मॉर्निंग.
निधी तयार असशील तर सुरू करूया. सर चालेल धीरज सर.
या शुअर.
Yes, ma'am.
स्टार्ट केलं तरी चालेल.
Yeah. Good morning, everyone present here. I'm Nidhi Mariwal. Good morning, everyone present here. I'm Nidhi Mariwal, your host for today's event. It's my pleasure to welcome you all to an informative session based on what after ITR filing and its litigation. Today, we are going to delve into the world of post-ITR procedures and explore the intricacies of dealing with potential litigation. Together, let's make the most out of this session, ensuring you leave with valuable knowledge and practical insights. Firstly, I would like to welcome today's guest, CA Dhiraj S. Dandgaval, today's speaker, CA Rishikesh Vangde, Vikasa Chairman of Satara Branch, Amul Bhosle, Treasurer of Pune Vikasa. This session is organized by Vikasa of ICI and hosted by Branch of Vikasa of ICI, jointly with Ahmednagar, Bhavnagar, Nanded, Sangli, Satara, Surat, Vadodara branches of Vikasa of ICI. Firstly, I would like to invite CA Rishikesh Vangde, Vikasa Chairman of Satara Branch, to join us virtually. He will share his opening remarks and enlighten us all.
Thank you, Nidhi. First of all, I would like to welcome our today's speaker, C.A. Dhiraj sir, to this session. We have already met many times for various sessions. I first of all thank you today Vikasa for hosting such a fantastic, wonderful session series for income tax and GST. This is very important topic for the article students as well as CA students in their practical life. CA students, first of all, I request you to please please make use of these sessions because ऐसे सेशंस बार बार नहीं मिलते हैं एंड आपकी जो भी रिक्वायरमेंट रहती है बोथ एकेडमिक्स एज वेल एज प्रैक्टिकल सेशंस के लिए तो प्लीज हमसे बात करते रहिए. विकास ब्रांचेस आर ऑलवेज रेडी टू हेल्प यू आउट एंड आपका अटेंडेंस एंड आपकी फीडबैक से ही हमारा मोटिवेशन बढ़ता रहता है एंड दिस विल बी दी मोस्ट wonderful opportunity for you all to learn from the legendaries like Dhiraj sir. With this, I also wish you all the best for your upcoming endeavors in CA exams and in your article practical life also. With this, thank you very much. Thanks a lot.
Now, let me introduce our esteemed speaker for today. CA Dhiraj S. Dandgaval cleared his CA in 2012. He began his journey at Real Time Tech Sutra Services Private Limited in 2012-13. Currently, he is the proprietor of D.S. Dandgaval and Company, Chartered Accountants. He is also a partner at G.D.B. Associates Chartered Accountants. His expertise lies in various areas, including direct tax litigation, transfer pricing, cross-border taxation, and transaction advisory. With such an impressive profile and wealth of experience, I am confident that we are in for an enlightening and informative session. Over to you, sir.
Sure. So, good morning, all. Good morning, Rishikesh ji, and thank you for the word of introduction. So, the today's topic, that is what happens after ITR, is kind of is an area in which I practice since my what we could say starting of my professional journey, and fortunately I had an opportunity to work under such a principal who also is in this particular who is working in this particular area only. So the whole experience of my articleship was surrounding to the litigation in income tax. So normally when we say that we have to file income tax returns for many of our clients, it might be individual or any person from the 7 categories given in the Income Tax Act. the most of the energy we spent on filing the or making the compliances, that is at the time of filing return of income, doing the tax audits and all other things, tedious compliances, etc., etc. But subsequently, the filing, merely the filing, is not an enough, or it is not end of the journey from the perspective of income tax department. The filing of any particular ITR is merely a beginning of this journey of litigation under the income tax department. In the era prior to the e-verification or e-processing of returns and all those things, when we used to physically go to the income tax department to get our returns filed and have an acknowledgement, a rectangular stamp on our acknowledgement. At that time, I remember mostly the returns were processed physically. A particular person used to be there. He used to go through all the details we have furnished in the income tax return. It was a physical form, and then we used to file it to the department. Later, from year 2008, 9, 10, and onwards, there was a schema, an Excel macro, we could say, was introduced by the department, under which we could mention all the details instead of physically writing it on the paper, and it will be getting furnished online. And later, the department in the recent era, let's say after 2015, the maximum digitization has happened in the department. The returns are getting processed under the e-processing system, and subsequently the scrutiny proceedings, which we call as a first step for the actual verification or actual processing of income tax returns, has started. There are many provisions in Income Tax Act. Specifically, we could say under Section 139, we could file the original return. 139(1) is the actual original returns due date. Then we could file up to a belated return under Section 139(4). Then there could be a revised return under 139(5). And subsequently, very recently, they have introduced an updated return. So this journey of updated return could be filed within 24 months from the end of the particular year has also begun since last 2 years, with an additional imposition of tax of about 25 to 50%, depending upon the delay caused in filing the return. And then this journey of processing is initiated. In addition to these returns, if at all any person has failed to file his income tax returns and there is still a time remained to issue a notice under Section 143(2) or 142(1), in that case, the income tax authorities and specifically the jurisdictional assessing officer can issue a notice under Section 142(1) to that particular assessee to request him or to ask him to file his return of income depending upon certain information available with them at the time through the computerized data, RMS data we could call, or Insight portal. There are many avenues from which the income tax department is gathering material for all of the assessees, and this material get processed by them, by the systems, with the set parameters, and through that parameters the very fine information is getting in front of the department. Accordingly, when all this process is done and the jurisdictional assessing officer is equipped with the information, in that case, he can check whether you have filed your return or not. If you have not filed your return, then he can ask you to file your return under Section 142(1). Moreover, If the particular limit of original assessment has lapsed, in that case, he can go for the scrutiny reassessment proceedings. So, under section 148, he could issue a notice to the assessee, and he then can ask assessee to comply with the notice and file his or her return of income. And then the proceedings of scrutiny or reassessment or assessment, whatever we can call in the normal day-to-day language, is beginning. Going ahead, the first step which the department takes is of a summary assessment, which we call, that is an intimation under section 143 bracket 1 of the Income Tax Act. Earlier, when there was an era of physical filing as well as the initial phase of digital filing, this intimation under section 143(1) is a primary assessment by the department. What they do is uh, they check whatever information you have filed. Further, they also recheck that information which you have filed along with the information they are having at their end from their various sources. And after comparison, if they find that certain things are not matching or certain claims which you have made are not tenable, in that case, they won't accept such claims. And accordingly, a summary assessment, a primary assessment of the income tax return filed, is getting issued to you under section 143(1). And like I said, in the previous era, when we used to file the physical or initial digital era, this 143(1) intimation used to take place. I mean, there was no upper limit for issuing this particular document. So, assessing officer used to issue it anytime whenever he feels that it is necessary or he is ready with the computation and comparison. So, there used to be an era when this 143(1) has received by the assessee even after 2 years, 3 years, 4 years also. There was no upper limit to that. But now, in the present scenario, if you are filing a return for a salaried person or a person who is having income from other sources only or very minute income, or let's say such a kind of income which includes salary, income from house property as well as income from other sources, wherein you need not to put very much efforts as well as systems to recheck whether the claim made in in the returns filed are valid or not. In that case, the intimations are getting received by the assessee within 24 hours. Such kind of a extreme level of digitization has happened, we could say. And there have been many cases of litigation which held that, according to department, that this is a primary assessment of income, and therefore subsequently one assessment under section 143(2), the original assessment should not be done. Department should have initiated 148 notice or reassessment, and all such sort of litigation took place uh, for the status of assessing. I mean, what could be held about this intimation under 143(1). And therefore, the courts later on decided that it is merely an intimation. Subsequently, an original assessment could be initiated under 143(2) if the time permits, and if the time has lapsed for issue of scrutiny proceeding notice under the original assessment, in that case, only the reassessment proceedings can be initiated, but it is mandatory to issue 143(1) intimation after the filing of return, and the notice period, I mean the period under which such kind of a notice can be issued, is 9 months from the end of the financial year in which the return has been filed by the assessee. So please understand, they are not at all referring to the previous year. They are not at all referring to the assessment year. Now, the department is referring to the financial year in which the assessee files his return of income for the first time. Please understand, like I discussed in the initial stage, there are various provisions in the Income Tax Act to file your return of income. That there is 139(1), 139(4), 139(5), and then we are having 139(8)(a). It is talking about the updated return, and it can be filed within 24 months from the end of the particular year. So, whenever the assessee is going to file his return of income, it is not necessary the assessment year in which he is going to file. It might be beyond the assessment year also. So, let's take an example. Recently, financial year 23-24 has concluded as on 31st of March 24. The assessment year will conclude on 31st of March 25. However, if at all the assessee could not file his return of income by 31st of March 25 and he filed it by 31st of March 26, in that case, 9 months from the end of the financial year, that is 31st of March 26, thereafter you need to count the 9 months, that is 31st December 26. By that time, maximum, the department needs to issue an intimation under 143(1) of Income Tax Act. If it failed to issue the 143(1), subsequently it cannot go for 143(2) notice. They have to compulsorily go with 148 notices for reassessment of income. Now, going ahead, there is a procedure called rectification. So there could be possibility that the income tax officer or the system might commit some mistakes while computing your return of income, or while computing or while sending the intimation under 143(1). And if you are very much confident about the mistakes they have committed, as well as you have all the documentary evidences for the claims which you have made, in that case, you can file a rectification application under Section 154 of the Income Tax Act. It is considered that, or it is very well accepted that, if at all you want to raise any concern about the mistakes which were committed in the 143(1) intimation, the only avenue which you have is you can file a rectification application against the same under Section 154, and that too within 30 days from the date of service of this intimation. So please understand, whatever you have to raise, the time limit given is 30 days only from the date of receipt of that particular intimation. It is not a date of issue. There have been an incidences wherein a particular intimation is dated or is backdated, we could say, but it is not mailed to the assessee, or the mail has not been reached to the assessee. In the digital era, there are internal circulars issued which says that until and unless any particular document issued to the assessee is leaving the environment which could be controlled by the income tax department, it cannot be said that it has been left from the systems of income tax department, and the things are considered as the notice has been served. In such case, if the notice is received by you or not, it won't be a matter of concern. They will consider it as being served, and accordingly, you have to act upon it within 30 days. There are instances under which the assessee could not respond within 30 days. In that case, assessee has to apply for delay condonation, and if the reasons are accepted, the delay is condoned, and the assessing officer or the department will entertain the application which you have filed. Please understand there is no specific format or form for making an application under Section 154. You have to narrate what has happened in the intimation order and what exactly you were expecting from the intimation. However, if you could not explain it in detail in the application file, in that case, again, this process of rectification of this written or intimation lasts for 6 months. So there are instances in which the assessing officer with whom you have filed a rectification application, it might be CPC or the actual jurisdictional assessing officer, he will communicate with you regarding, he will ask more details about the claim which you have made with the rectification application and all other things. And then accordingly, after considering all your submissions, he will take a decision whether the intimation issued was appropriate or not. And if he thinks that it was not appropriate, then he will do the rectification and will then accordingly give the effect of that rectification to the return of income filed. Subsequently, this is the most primary thing which is happening after filing of return. Then there could be instances, I mean, now 95% of the cases are getting selected by automated systems, computerized automated systems. So, and the remaining 5% are being selected by the assessing officer. So most of the times there are parameters set. Like very recently, I think in the first week of May, the department has issued a guideline for selecting the scrutiny cases for this particular financial year. So they have already set up parameters, various parameters. So there could be a cash deposit uh, above a certain level. There could be property related transactions, n number of things, cash withdrawal or some TDS related, some discrepancies between the turnover declared between the GST and income tax departments reporting, and all those things, various things. In such case, when the computerized systems are getting set with these parameters, if you have filed your income tax return, the systems will immediately flag that XYZ things has been reported by the SSE, and according to parameters, it is not in line with what it should be. In that case, we need to go in detail, and accordingly, the notice under Section 143(2) of the Income Tax Act is issued within 3 months from the end of the financial year in which the return is filed. Now, please understand that you are getting a notice under Section 143(2) for the regular assessment. And just like previously, what we used to have under Section 148, that there is a reason recorded, and the whole reassessment proceedings were revolving around reason recorded. Similarly, in the scrutiny proceedings, which we call as an original proceeding, there can be a limited scrutiny or there can be a complete scrutiny. So, in simple words, there could be possibility that a particular assessment is open for verification of a limited point. The assessing officer won't go here and there. He will just ask. So let's say there is a property related transactions. He will ask, kindly provide me the sale deed, the purchase deed, the in detailed computation, and the sources from which you have acquired the property, or if you are a seller and have claimed any exemption, in that case, the proof of exemption which you have claimed. So his all inquiry will be surrounding to that particular limited topic only. However, there could be possibility that there is a full total kind of a scrutiny which could take place in case of a particular assessment, under which the assessing officer can ask for anything. It will start with the asking for your books of accounts and all the primary records which you have maintained for your business or anything, for with your bank statements and all. And then he can go for any transaction took place with it and can inquire about the sources of it and the other related information surrounding those transactions and all those things. So there is no limit what he could ask and what he could, how he could get satisfied and any other things. And therefore, the limited scrutiny is having a big and vast scope in the original assessments. Now, there could be question as to whether an assessing officer can directly jump from a limited scrutiny to the total scrutiny. And in that case, the question is yes, he can jump from the limited scrutiny to the total scrutiny, but he cannot do it on his own. He has to apply permission from his superior authority, such as principal CIT or CCIT. And after their permission, after their satisfaction, they grant the permission. And after that, he could shift the limited scrutiny to the total scrutiny. So there could be instances under which he might be of the opinion that the limited review or limited scrutiny won't be justifiable in the particular assessee's case. And therefore, in such circumstances, it could be possible that he may approach to the superior authority and can narrate or officially intimate the superior authority and seek their permission to start the total proceedings. In that case, assessing officer will again issue you another notice for total proceedings, scrutiny proceedings, along with the permission he has received from the superior authority. Please understand, if such kind of a permission is not received and has been intimated to you, in that case, there could be possibility that the whole total scrutiny could be held invalid. And therefore, it is most important to understand whenever your assessee has received initially a notice for limited scrutiny and subsequently under any circumstances, if you feel that the questionnaire or the inquiries which are being made by the assessing officer are going outside to the purview of that particular topic of limited scrutiny, in that case, you can ask for the permission or you can, in very, very polite words, convey to the assessing officer that these questions are totally unrelated to the topic for which the limited scrutiny has been initiated. Therefore, we are very much under dilemma as to whether the total scrutiny has been initiated or not. And if the same has been initiated, then kindly provide us the permission uh, for initiating the total scrutiny in the particular assessee's case. So, if the assessing officer is not providing you, then you are not supposed to give any further information for out of the hand. But however, if the assessing officer has provided you with the permission he has sought for, in that case, you can definitely go for the answering all the questions which he has raised. Now understand, from 2019 onwards, the faceless assessments are taking place at a larger scale. And barring the assessments taking place after the search and survey, there are hardly any matters which are being dealt now by the department on physical one-to-one basis, whereat you have to appear before the assessing officer in person somewhere nearby location where the income tax department is located. Otherwise, everything is taking place through the faceless assessment only. The 143.2 will be issued to you by the NFAC. Subsequently, they will assign the particular case to the assessment unit. The assessment unit will communicate you with with notices under section 142(1). So subsequently, after all the sawal jawab taking place, those responses will be then sent to the technical unit, or what we could say, verification unit. Whatever responses you have filed will be sent to technical unit as well as the verification unit. Then, on getting a response from them, the assessing officer drafts his assessment order, his computation as well, and if necessary, those will be shared with the review unit. And on getting the response from the review unit, your assessment is getting completed. Now, please understand, all these things are taking place through the income tax portal only, that is incometax.gov.in, through which we are filing our income tax returns. And this income tax portal, uh, I mean, you are not supposed to share any contact details while making the submissions. So there have been instances wherein the submissions are made on the letterhead of the SSE or on the letterhead of the chartered accountant firms who are representing the SSE. And in such case, you are on your own providing your contact details to the department. So normally, let's understand that there could be sources to the department, but they are not supposed to connect with us other than the e-proceeding portal or a website. Every communication should take place from that particular website only. And to avoid any further kind of a communication, it is always advisable to not intimate the department in any way your communication details. It would be in the interest of assessee as well. However, if you feel that there are certain points which are not cleared after making n number of submissions in response to the notices they have issued, in that case, you can ask for personal hearing in the form of video conferencing. So please understand, you cannot expect the assessing officer will give you personal hearing just like we used to have in the earlier era prior to 2019, 2018, where we used to visit the assessing officer's office and used to communicate whatever are the details of that particular case are. But in this era, you have to communicate it through your submissions and video conferencing only. And in 99.99% of times, this video conferencing takes place like an audio conferencing, audio call only, because the other person's screen, that is the officer's screen, is blank, and you have your permission, or it is not mandatory for you also to show your face. So you can also keep your screen blank. It would be like an audio call wherein the assessing officer may ask you, as in what exactly for you have asked for this video conferencing request and all those things. So most of the times when this 142.1, so please understand 143.2 is the notice with which the scrutiny proceedings begin. Later, 142.1 is the notice with which the assessing officer can ask you various questions, can ask you details and documents regarding the questions he might be having, and in response to which you have to file all that information which they have asked for. Please understand, you have to respond to that notice point wise. If there are 13 items in the notice, for example, then you have to respond on each and every item. It is not at all expected to it might be in a tabular format, it might be in a paragraph format. It is up to you how you have to present. But the thing is, it must be clear from your submission that XYZ thing is responded or not responded, or you have sought some more time to produce certain information or computation or document in regard to that particular. You cannot simply skip all those points and say let's say out of 13, I am having information related to only 8 points, and I'll then submit for only 8 points. That could not happen, and that should not happen. You can ask for the assessing officer that particular point or question you have asked for is not at all relevant to me, and that too in a very, very polite language. Please understand, the authorities now are are asking you certain questions to verify your claims. If the language of your submission is slightly showing some kind of an arrogance, your assess is going to suffer with that. So whatever you want to say, you have to write it very politely and in a very simple language. One more thing, we need to understand that we should not use any heavily technical or legal language while explaining the simple facts of the case. You are expected to write it in as simple words as you can. You are not at all supposed to write in any harsh language, in very technical language. If at all certain points are not getting communicated in a proper way, then you should seek help from your seniors, from your principal, from your friends in the profession and all. So accordingly, these submissions needs to be made. One more thing, if a person is asking for a particular information, in that case, you are supposed to submit that information in whole. You should not do something which could raise concern as to whether you have submitted some half information or some information which is not relevant. If they have asked for you, uh, like I said, some 13 questions, then you should restrict yourself to those 13 questions. You should not provide any other excess information until and unless asked for, or any such information which you feel that it would be important to support your claim. In that case, you can definitely submit it. But if any information would hurt your assessee or your client, in that case, you are not supposed to submit such kind of an information. Further, after submitting this information, it will be shared to the verification unit whether this information which I mean the documents you have submitted are genuine or not, or any further inquiries needs to be made or not. Let's say I'm again taking a help, for example, of a property related transaction. So you have submitted a particular sale deed or purchase deed to the assessing officer in your faceless assessment, and the assessing officer wants to confirm the validity as well as the genuineness of that particular document. In that case, he can request uh, to the verification unit to kindly go through these documents and confirm its validity as well as genuineness. And according to the report of the verification unit, he can respond to you on that. There could be, I mean, in India, officially, we have a number of languages, and there is a possibility that the person who is assessing you might not be from your own state, or he might not be understanding your language. So there are problems, like in Maharashtra, we are very lesser known about the languages in South, or many of us might not understand Gujarati, Tamil, Malayalam, or some northern languages, northeastern languages. In that case, if any document is drafted in that particular language, the assessing officer has to confirm whether whatever has been submitted is relevant to the information asked for or not. In that case, he can refer to the verification unit and get those things confirmed, verified from them. Later, he might also ask you for a English translation of that document. So there are possibilities that still, if he's having any further doubts about that particular transaction, he further can ask for a English translation of whatever document you have executed. In such case, you have to get those documents translated into English from a particular professional with the help of that professional, and you have to submit this document to the department. Later on, after going through all this, all the things which you have submitted. He will process those things. He will apply his own mind, and he will come up with a particular thought process. Whether he might accept whatever you have said in totality, or he might accept it in partially, uh, or he might not at all accept anything whatever you have submitted. So there could be instances under which you might feel that you have submitted everything, your claim is clear, and now no addition is required to be made in any way, but still the assessing officer makes the addition because he is not satisfied with whatever you have submitted to him. In those cases also, it is most important that you need to keep calm and cool, because there he will send you a show cause notice under section 144 of the Income Tax Act, and in that show cause notice he will state as to why he is not satisfied, and whether you, I mean, he will say it will be as good as a draft assessment order. He has to write as to why he is not satisfied with your submission, whatever documents you have submitted, what claims you have made, and why he is not satisfied. And if all those things are not there, in that case, you can raise your concern in response to the show cause notice. If those things are raised and you are again in opposition with that, you are those opinions or observations made by the assessing officer are not acceptable to you. In that case, you yourself can again raise your concern in response to the show cause notice issued to you. I have seen many cases under which the last submission with show cause notice has completely turned around the assessment proceedings. There have been instances, I mean, I could remember one thing when in last year, in this some 24th May, yeah, this is exactly a year has been passed, and that was a very, I mean, the facts of the case were very unique. A particular person who has earned 25 lakh rupees by selling of a particular land has introduced those 25 lakh rupees in a partnership firm, and he became a partner of that firm, a real estate firm. He has paid all the adequate taxes on the capital gain arising from sale of that immobile property. Later on in the same year, the firm has purchased a property worth rupees 10 crores. There were three partners in that firm. He was one of them. So please understand, his own capital introduction in the firm was of rupees 25 lakhs only. However, the partnership firm has purchased a piece of land for rupees 10 crores. The firm was already in existence. He has became a new partner to that firm. He was not one of the founding partners. Now, while executing the agreement of purchase deed, all the three partners were performing or were signing to that document as part. All the three partners, they were signing as partners. So normally, it could happen that a particular legal entity could give a power of attorney to one of the partners or one of the employees to sign on behalf of the firm to execute the document. However, in this particular case, all the three were signing on behalf of the firm. Now, what department or the information went to the department as if the three individuals have purchased this particular piece of land. Now, three individuals have purchased, as in the equal share, if we could compute, is of 3 crore 33 lakh something and all that approximate amount, the odd amount. Now, the department was of the view that out of the total transaction of 10 crores, SSE's share was 3 crore and odd amount. However, assessing was not at all having so much kind of an income. Then how SSE has came up with so much amount? Whether he has availed some loans and other things that they have to assess. In the initial period, SSE tried to represent himself on his own and made certain submissions. However, the submissions were not adequately made or drafted. And at the very fag end, when he has received a show cause notice and 31st May was the due date for finalizing the scrutiny proceedings, he approached me and we were going through all the records and we could trace all the transaction. Later, we drafted our response to that show cause notice, which has proposed to make an addition of rupees 3 crore and odd amount in the hands of the assessee. So we have established all the trail of how the money is received, how the capital gains tax has been paid. The same has been introduced in the partnership firm, the capital accounts of the firm, as well as the purchase deed. The translation of purchase deed into English, it was drafted in Marathi. Then specifically, the partners were mentioned as XYZ firm Tarfe Bhagidar, that is on behalf of XYZ firm as a partner. So when you have written as a partner, the firm was very much equipped with the liquidity. They were having an ample amount of funds with them, and through which they have purchased the land. The partner's contribution, he was a newly admitted partner, was only rupees 25 lakhs to this transaction, we could say. We can't individually isolate any transaction in the firm, but partner's own contribution was only rupees 25 lakhs as a capital. And after filing this particular response, within 3-4 days, the whole scrutiny proceeding have been completed. The assessment order has been sent as a nil. So they haven't made any addition in the hands of the assessee. So this is with this we need to understand that though there is a draft assessment order has been sent through the show cause notice, there are possibilities that with a proper response and documentation, a submission of documents, you can turn around the proceedings at that stage also. That's why I have narrated this particular example. So it is very much important for us to be very calm, patient while drafting the submissions, while analyzing the case in hand, the whole scenario. Just like I said earlier, the most important part is taking place at the time of scrutiny proceedings only. Subsequently, you may add certain documents, you may reduce certain claims, and n number of things can happen. But whatever you have to say, it is most important that you need to say, you need to submit that document at the time of scrutiny only to avoid further complications in this case. Now, after our submissions, the assessing officer drafts his or finalizes his assessment order. If he feels that some review is necessary, he may refer to the review unit. And after receiving the report from review unit, he again has an option to as to whether he needs to accept something or not. And if he does not want to accept some suggestion of the review unit, he has to give it in writing as to why he is not inclined to accept those suggestions. However, if he is accepting all the things, then that's totally fine. He can go ahead with the suggestions from the review unit. Further, then he sends his assessment order, final assessment order to NFSC, and NFSC will issue you the final assessment order either through mail. It will upload on the portal. It will immediately send you an SMS stating that XYZ document has been uploaded or sent to you, or mail. Kindly do the needful, and some other sort of things through an SMS. And accordingly, you have to comply with the further requirements. Now, please understand, there are two further occasions at which the scrutiny proceedings can be disturbed. We could say I am intentionally using the word disturbed, and those occasions are: one is a special audit. In case of largely in case of any scrutiny proceedings going on in and for any professional or any businessman. I mean, when any income for under business or profession is involved, whatever you have submitted have been gone through by the assessing officer, and he is not very much happy uh, about the way the transactions have took place, about the genuineness and all those things. In that case, he may ask for a special audit under Section 142. There could be possibility that all your books of accounts have already been audited in accordance with the provisions of Section 44AB of the Act, and still the assessing officer is not satisfied with him with those documents. In that case, he can approach to the superior authorities such as principal CCIT or CCIT or principal CIT or CIT, as the case may be, and depending upon the how big the assessee is, and he has to convey as well as convince them as to why as there is a need of a special audit. And if the superior authorities are convinced, in that case uh, they can give him permission, or they can ask the assessee to conduct this special audit. Then the special auditor is appointed. The special auditor is amongst our own fraternity only, and that special auditor needs to be assisted by the assessee with whatever information he asks for, whatever data he asks for, and all those things. Then the special auditor gives his report to the assessing officer, and depending upon the report, the further scrutiny will be conducted. Now, this is one kind of an interruption or disturbance in the whole scrutiny proceedings that can take place. Further, there is a time limit set for the scrutiny. That is the end of the by the end of the financial year in which such kind of notice for initiating the scrutiny proceedings have been issued. You have to complete the scrutiny proceedings. So when such a special audit is conducted, in that case, whatever time has taken by the special auditor to conduct his special audit, that additional time period is allowed to the assessing officer to finalize his assessment report, and some extra time to form his opinion about the special audit report the auditor has submitted to him. Another part of this particular uh, scrutiny proceeding is a reference to the valuation officer. Again, coming back to the to the example of property transaction. Let's say you have sold a property for rupees 1 crore. The ready reckoner rate or the valuation arrived by the stamp duty authorities of that property is 1.5 crores. According to section 50C or 43CA, whatever is higher, the stamp duty value or the actual consideration needs to be considered as a total consideration while computing the capital gains. However, the assessee is very firm that the actual market rate prevailing that particular geographical location is not is very much less in accordance and not in accordance with the ready reckoner rates. So the ready reckoner rate are presumably very high in that particular geographical area, and therefore that cannot be considered as a total sale consideration. Now, to substantiate his claim, the assessing officer also submits a valuation report of the government approved valuer, a local government approved valuer. However, still the assessing officer, if he is not satisfied with the documents the assessee has produced before him, in that case, the assessing officer may refer to the valuation officer that such kind of a claim has been made. Please kindly go through all these things and give me a report on that. And accordingly, the valuation officer provides him the valuation report of that particular property. And subsequently, if it is over and above the valuation, then what needs to be considered, and all those things have been taken place in the chapter of capital gains. So I won't go into those details. But the thing is, again, whatever time has been taken by the valuation officer, that can be added to the uh, total time of scrutiny proceedings, and accordingly, scrutiny can be made. And Third kind of disturbance, these two disturbances or interruptions are happening for all sorts of normal clients to whom the transfer pricing provisions or international taxation provisions are not applicable. However, uh, in all the cases wherein the transfer pricing provisions are applicable, and after sending a draft assessment to the assessee, the assessee is having an option to appear or approach the dispute resolution panel for further verification and the proceeding of these issues or the additions which are proposed by the assessing officer in his draft assessment order. And accordingly, after the report of DRP, it is mandatory for the assessing officer to consider this report and frame the assessment accordingly. So, though it is an era of faceless assessments, all these three things can happen and has to happen. There is no alternative to that if the situations are in accordance with those things, and therefore, uh, a special audit or a reference to the valuation officer or this DRP proceedings, if the situation demands, have to be complied with. They cannot be avoided due to the fact that it is merely a faceless assessment. Okay, so after all these things, depending upon the report of the special auditor or valuer or the DRP, the assessment can be framed, finalized, and then be communicated to the assessee. Now, along with the communication of assessment proceedings or conclusion of assessment proceedings, the assessing officer also has to assess as whether the proceedings which are initiated uh, needs to be finalized along with the penalty proceedings initiation or not. So he has to also look as to whether a penalty should be imposed on the assessee for various purposes or not. That penalty normally in previous era the penalty was levied and very popularly levied under section 271(1)(c) for under normal circumstances for underreporting of income. Sorry, for not for underreporting, for concealment of income uh, or for furnishing inaccurate particulars of income. And please understand there were n number of explanations inserted into the provisions of this section 271(1)(c) by many of the by many litigations and all those things through budget sessions, and somehow there was no finality to it. There were disputes about the limbs which have selected, whether it is a concealment of income or submission of inaccurate particulars of income. The assessing officers used to select both of the cases, both of the reasons for which penalty should be imposed. And then the litigation came as to when the assessing officer himself is not sure as to whether it is a concealment or a submission of inaccurate particulars, then why the penalty is imposed and all those sort of things. Later, the department or the CBDT legislature came up with a new section, that is 270 capital A, for misreporting or underreporting of income. And they have very thoroughly studied the scenarios under which so many explanations were inserted in the Income Tax Act, and accordingly, this 270 capital A has been introduced, and it tried to cope up with all the lacunas of 271(1)(c). So from financial year 17-18 onwards, sorry, 18-19 onwards, I guess, this 270 capital A provisions are effective and applicable for all the scrutiny proceedings. Further, if there is any addition made under section 68 or 69A to 69D, in that case, the penalty proceedings are initiated under 271 double AC. And if the assessee has not responded to any notices under section 142(1), then there is a levy of penalty of rupees 10,000 under different section. Normally, it was previously under 271(1)(b), and yeah, still it is 271(1)(b). And further, if the assessee at all has not filed any return of income, then 271(f) penalty could be imposed on the assessee. Now, please understand what all penalty proceedings should be initiated has to be mentioned in the assessment order only. If any particular penalty proceedings initiation is not mentioned in the assessment order, those penalty proceedings cannot be initiated at all. Further, the penalty proceedings which are initiated, the show cause notices for the same under section 274 read with those particular sections are being issued to the assessee somewhere along with the final assessment order only. So you might see or you might witness for any of your clients that whenever they have received any assessment order with an addition, it will be accompanied with the notice under section 274 read with section 270 capital A or 271(1)(c), whatever case may be, and whatever the assessment year might be. And after the completion of the normal scrutiny proceedings, the penalty proceedings are initiated. Though the penalty proceedings are totally or largely depending upon the scrutiny proceeding, or we could say the quantum issue. However, those are completely different. Merely initiation of proceeding cannot be held as the penalty has been imposed. With a proper documentation and submissions, you can avoid the penalty to be levied on the assessee. For that, you have to substantiate your claim. You have to see whether the claim made was a bona fide claim or not, whether there was an addition with the estimation or not, and all those sort of things you have to analyze, and then only you can decide, or the assessing officer can decide whether the penalty is imposable or not. If the penalty is not imposable, in that case, you can come out of penalty proceedings. However, if it is impossible, in that case, you have to face the different amount of demand of the penalty. If it is for underreporting only, it is 50% of the tax amount. If it is misreporting, it is 200% of the tax amount. Unlike the previous era in which it could range within 100% to 300% of the tax amount, and largely the assessing officer ended up imposing 100% of the tax amount penalty. In this particular case, they have specifically categorized the penalties in two categories for underreporting and misreporting. Now, they have provided another leeway to you as to if you are satisfied and you are agreed to the addition made in your hands, then within 30 days from the assessment order, whatever demand has been raised by the assessing officer upon you under notice under section 156 of the Income Tax Act, you have to pay that amount. First of all, you are not supposed to file any income tax, any appeal against the assessment order. And you also have to file one Form 68A under section 270 AA of the Income Tax Act. Now, what this particular section says that, look, I am not going to any further appeals. I have accepted the addition made in my hands. I have paid all the taxes which were demanded within 30 days, within that stipulated time, and I am not at all going for any further litigation. So kindly do not impose or do not initiate the penalty proceedings in my case. However, the penalty proceedings were already initiated. Therefore, there was no point in requesting as to do not initiate the penalty proceeding. But you can definitely request do not impose the penalty proceedings. But this application can be made only if the penalty is initiated for underreporting of income. That is for 50% of the tax liability. However, if the penalty is initiated for misreporting of income, in that case, you are not having this option of filing Form 68A under Section 270 double A. In that case, you have to face the penalty proceedings also. Now, completing the penalty proceeding, what all avenues do the SSE have with his own? So, the avenues the SSE have is to first approach is to file an appeal against the assessment order before Commissioner of Income Tax Appeal under Section 246 of the Act, or he can approach to the CIT or principal CIT with a request under Section 264 of the Act that look, this particular proceeding has been concluded in my case. However, I feel there are certain points under which these additions or the disallowances should not have been made in my case. Therefore, kindly look into this matter and analyze the things, and accordingly uh, finalize the assessment. This application under Section 250 to 264 can be filed by the SSE. Now, please understand, if you have filed any application before any appeal before CIT appeals, you are not supposed to file any application under 264. Those are parallel authorities. However, the major lacuna under 264 proceedings are against the order of CIT, principal CIT, you cannot further appeal before the tribunal. However, against the order of CIT appeals, you are having another opportunity to go with the Income Tax Appellate Tribunal, which is the last fact-finding authority under the income tax case. So please understand, the appeal you have to file is to be filed within 30 days from the receipt of the order. So again, I'm stressing on receipt of the order. It is not issued it is not a date of issue of order. So very recently in the month of March, one of my assessees have received a copy of assessment order on 22nd of March, whereas the date on which it was finalized or it was digitally signed was 9th of March. So uh, there cannot, so we can say that as on 9th of March, the order has been issued. However, the assessee has received the order on 22nd of March. Till 21st of March, it was not at all uploaded on the income tax portal. The mail was not received by the assessee. Nothing has happened, but it was received on 22nd of March. So from 22nd of March, you have 30 days to file your income tax appeal before the Commissioner of Income Tax Appeals. Now, again from the 2020 or 2019 again, that proceedings before Commissioner of Income Tax Appeals have also gone faceless. So now again, you are not having any liberty or any opportunity to appear before him personally at his office. You have to communicate with the Commissioner of Income Tax Appeals through online web portal only. Again, just like I said previously, that the most important part of this faceless era is the communication and the way how you draft your submissions. Now, please understand, this is also an income tax officer or income tax commissioner, an authority appointed by the department or CBDT only. Further, please understand, this authority is a quasi-judicial authority. So his role is of a very important nature. And while making a submission to the higher authority, such as the Commissioner of Income Tax Appeals, it is not supposed to humiliate the lower authority, that is the assessing officer. So please understand, you should not have any kind of such wordings that the assessing officer has not at all applied his mind. He was fool or he was this and that and any other things. You should convey whatever you have to say in a very, very, very polite language. And you have to convey it in a proper manner. Please understand whatever you have submitted before the assessing officer, you have to submit it before the CIT appeals also. In addition to that, you have to further elaborate the issue in whatever maximum possible way you can to make the CIT appeal understand as to how your claim was legitimate as well as acceptable. If you fail to do that, it will hamper your client, if it will hamper your assessing. A very recent case I have been associated with was a case uh, involving assessment year 910. Please understand. Now we are sitting in 24, almost 15 years have passed. The case was a very simple thing. A particular person has merged his business in a private limited company. An individual has merged his business in a private limited company. However, whoever were his customers or yeah, those have deducted the tax at source in his own individual PAN, on his own individual PAN, and not in the name of or PAN of the company. However, the receipts, the total receipts were booked in the books of accounts of the company only. While finalizing the books of accounts and audit, all those JVs were passed. The concerned income was passed, the concerned TDS was passed to the company. And later on, 2009-10 was the first year in which 26S, Form 26S was getting issued to the SSE, which shows the amount of tax deducted at source, how much amount was paid, the gross amount, and how much tax was deducted, who deducted, how deducted, under which section it was deducted, and all those things. The difference was about 3 crore and 13 lakh rupees. So the notice was issued stating that your 26S shows amount of XYZ rupees in total. However, you have reported only this much. So there is a difference of 3 crore 13 lakh. So we have to add it in your income. The matter in the went from scrutiny proceedings to CIT appeals. CIT appeal accepted our claim. However, the department has gone against the CIT appeals order to the department, to the income tax tribunal. In the income tax tribunal, all the submissions were made, all the supporting documents were provided, and tribunal was of the issue that was of the view that this needs to be looked at with a fresh, what we could say, a fresh opportunity of being heard should be given to the SSE before the assessing officer. So the matter was remitted back to the office of assessing officer. Now, in 2017, a second round of scrutiny proceeding has taken place, and in this round also, we were called by the assessing officer. Now, please understand, an assessing officer has to give his reply or finalize his assessment if the fresh opportunity has been given to the assessee within 1 year from the end of the financial year in which the tribunal has set aside the matter to the file of assessing officer. Now, almost he has lapsed some 8-9 months from the end of the financial year in which the order has took place. Later on, he came with a very hurried notices as to submit this, submit that. We have submitted all the relevant information to him. However, he could not process all those documents, and he again made the similar addition. Now, proceedings we have to again claim for our SSE. Whatever is right, we have filed against that new assessment order another appeal to before the Commissioner Appeals. Now, please understand, the Commissioner of Income Tax Appeals have again called for all the documents. And please note, a 15-year or old case is going on in the year 2015. In the year 2024, you have to keep all these documents with you all the time. You have to study it all the time and make a proper submission. And after making all the submissions, all the documents, the addition has been restrained to an amount of rupees 2.10 lakh only. Out of 3.13 crores, the addition was merely made for rupees 2.10 lakhs. So it is only due to the fact that with a proper submission and a documentation, you can come out of any proceedings alive and without getting much hampered by the authorities. The only thing which you have to do, so there were n number of things happened in the assessment proceedings. Very heated arguments were took place between us due to n number of claims and all those things. The assessing officer was not at all cooperating in terms of, or somehow he was not at all satisfied with whatever submissions we have made. However, you have to keep cool, calm, and patient while drafting these submissions, and should not lose your composure and make any such statement as to assessing officer was fool, he was not at all understanding the situation and the facts and all those things. You have to only focus on the issue in your hand and then accordingly make submission before the higher authorities. Otherwise, it might hamper your client and you may end up having a huge tax liability upon your shoulder, or the client is having a huge tax liability upon his shoulder. Now, please understand the CIT appeals powers are coterminous with the powers of assessing officer. If there is a limited scrutiny and the limited scrutiny point is going before the CIT appeals, in that case, he can limit his own proceedings around that particular issue only. However, if he feels that a further inquiry needs to be done, or from his inquiries some other aspects are coming out which needs to be looked after, he can do so. Further, there are possibilities that certain documents which remain to be submitted at the time of scrutiny proceedings, those documents can be submitted before CIT appeals. Those are called as additional evidences. And the rule governing submission of additional evidences is Rule 46A. You have to substantiate as to why you failed to submit these documents before the assessing authority, assessing officer, upon which the CIT appeal may allow you to file the appeal or may accept your additional evidence, and it will remit it back to the office of assessing officer for further verification. CIT appeal won't apply his mind until and unless the assessing officer has gone through all those documents and has applied his mind, and then the income tax officer or the assessing officer, who is a subordinate authority to the CIT appeal, will apply his mind. He might call upon the assessee for further clarifications on the documents which are submitted as additional evidences, and then after giving an opportunity to the assessee, he will write up he will make his own remand report and he will send it to the CIT appeals. After receiving a remand report from the assessing officer, CIT appeal shares it with the assessee. Please understand, the remand report will not be shared by the assessing officer to the assessee. It will go, or it will be shared by the CIT appeals to the assessee. After receiving that particular remand report, it is our responsibility to counter the remand report if the remand report is not in your favor, and you have to analyze it very minutely as to why the assessing officer is not accepting your claims and your submissions, and accordingly you have to counter it. After it is called as rejoinder to the remand report. After submitting this rejoinder, then the actual proceedings before the CIT appeal begins, and the CIT appeal starts applying his own mind as to what are the facts, what are the submissions made, what all documents you have submitted. He will go through all those things, and then he will ask you for your submissions. He will ask you for further clarifications if some points are not getting cleared from your submissions, and accordingly, all the proceedings before the Commissioner of Income Tax Appeals gets concluded with an order under Section 250, 254, I guess. I'm not recalling the exact section, I'm not able to recall, but it will get concluded with CIT appeals order. It might be in your favor or it might be against you. And again, if it is not against you, or that is, if it is in your favor, then you are free to go. However, the department is again free to go against that assessment, that order of CIT appeals before the Income Tax Appellate Tribunal. Please understand, just like you are having a liberty or an opportunity to go against the order of CIT appeals, if it is against you, you are also at a liberty. The department is also at a liberty to go against the order of CIT appeals, which is in favor of the assessee. And therefore, there are instances under which the department might go against the assessment order, against the order of CIT appeals, subject to the fact that the amount involved, the tax effect involved, shall not be more than 50 lakh rupees. Shall not be less than 50 lakh rupees. It should be more than 50 lakh rupees only. Then and then only it is worth to consume the time of appellate authority, such as Income Tax Appellate Tribunal and all. Similarly, there is a monetary limit of 1 crore if the department has to file appeal against the ITAT order, tribunal's order, and now coming back to CIT appeals, or rather coming back to the penalty proceedings. If at all you have filed an appeal against the assessment order, you can request the lower authorities, that is assessing officer, to keep the penalty proceedings in abeyance. For that, what you have to do, you have to submit a written application. It might be a written application on a faceless basis, or if it is issued by the jurisdictional assessing officer, you can submit a physical copy also to his office, along with Form 35, the statement of facts and the grounds of appeal which you have raised before the Commissioner of Income Tax Appeals. And there are possibilities in 99.99%, the assessing authority, that is the assessing officer, keep those penalty proceedings in abeyance till the conclusion of proceedings before CIT appeals. However, if such an application is not filed, in that case, the assessing officer has to finalize the penalty proceedings within 6 months from the end of the month in which the original assessment proceedings have been concluded. Let's suppose any particular assessment order has been concluded or finalized and issued or served on 18th of March. In that case, within 6 months, that is by from the end of the month in which the order was finalized, that is by 30th of September, the assessing officer has to finalize the penalty proceedings also. And accordingly, the penalty order is separately issued. In finalizing the penalty proceedings, he will issue you a number of notices as to show cause as to why the penalty shall not be levied to you. Similar to the assessment proceeding, you have to respond to those notices. And if he is satisfied, he will not impose penalty. If he is not satisfied, he will impose the penalty. Supposedly, the penalty is imposed and the order is accordingly finalized. Then again, you have a liberty to file an appeal against such an order by the assessing officer for penalty proceedings before the Commissioner of Income Tax Appeals. However, if it is in your favor and you are agreed to the penalty, then you can pay the same and can get rid of the all litigation proceedings going on in your case. Further, there is another proceeding going on in your case, and that is a recovery proceeding. After finalizing the assessment, you will get a demand notice under section 156 of the act. That demand notice will specifically bear one number which you have to pay by that day or that month or in which that particular notice is issued. And if you are paying immediately, the interest will stop, the demand will stop, it will halt. But if you are not paying that amount of demand, then the recovery proceeding will be started by the jurisdictional assessing officer. He will issue you letters, he will issue you notice of demand further for claiming those amounts. But if you have filed an appeal against the assessment order, then you can pay 20% of the total demand raised to the department, and you will get a stay of on demand raised for the 80%, that is the remaining amount of total demand. If you do not wish to pay that 20% amount also, then you can file an application with the assessing officer that look, these are the facts of the case, these are the documents which I have submitted, and I'm very much confident, and the facts also are very much in support of that. However, due to some matters, the assessing officer was not satisfied with the same, and I am of the opinion that the demand should not be raised or a stay can be granted. Then assessing officer, after applying his mind, may decide to stay the demand as a whole, or he may ask you for payment of lower percentage, that is instead of 20%, he might ask you to pay 10%, 15%, or in some cases 5% also. If he is not satisfied, he will deny your request. Then you have to approach to the higher authorities. So if your assessing officer is income tax officer, in that case his superior authority, that is the ACIT or DCIT, or his superior authority, that is additional CIT or joint CIT, or if they are also not inclined, then the commissioner of income tax or principal commissioner of income tax. And if they are also not inclined, then you can approach through tribunal also. Now, please understand, the stay proceedings can travel separately to tribunal. They are not at all depending upon at which level your original proceedings are going on, whether it is before tribunal or before CIT appeals. If you are very much firm on your application or on your opinion, in that case, you can travel for stay proceedings up to tribunal also, but that proceedings are carried out separately. Now, coming back to the CIT appeals, if the CIT appeals proceedings are finalized and they are in favor of you, your penalty will get automatically dropped. Merely filing this order of CIT appeal before the assessing officer, all the penalty proceedings will be dropped. Because if there is no original demand, the penalty cannot be levied on anything. If partial relief has been given, then penalty proceeding will prevail for only that partial proportionate amount or topic for which the addition is made. And if the CIT appeals order is against you or against the assessee, in that case, the penalty proceedings will continue. And like I said previously, if the assessing officer is satisfied with your submission of not levying the penalty, he might give you a relief, or if he is not satisfied, he will conclude imposing the penalty upon you. Further, in addition to the proceedings and prior to going before tribunal, there is one more step involved from department's perspective. Let's say there is a completion of scrutiny proceeding at the assessing officer's level, who is an ITO or a DCIT or ACIT or something, and his superior authority, that is the Commissioner of Income Tax, is not satisfied with the opinion which he has formed during the scrutiny proceedings. That is, the relief which he has given to the assessee is not in line with the law, or it has caused a loss to the revenue. In that case, the revenue is equipped with a section or a proceeding under Section 263 of the Income Tax Act. Those are called as review proceedings, and it is taken up voluntarily by the Commissioner of Income Tax and not appeals. It is merely a Commissioner of Income Tax or Principal Commissioner of Income Tax, depending upon the size of the client, size of the assessing. So, can CIT take up 263 proceeding anytime after the completion of assessment? The answer is no. The the CIT can take up this proceeding within 2 years from the end of the year in which the scrutiny proceedings or the reassessment proceedings were completed in case of the assessing. Only within 2 years and not beyond those 2 years. So, if at all such kind of an objection needs to be raised, there is this last way. If the 2 years have lapsed, then the CIT also cannot initiate the 263 proceedings. And therefore, what exactly are these 263 proceedings? Is he will issue you a notice that on the basis of assessment order, which the assessing officer has finalized, I have gone through it and I am of the opinion that it has caused loss to the revenue, or it is against the law and some provisions of the law, and that relief should not have been provided to you. And accordingly, I wanted to know as to why such kind of an addition shall not be made in your case. So now again, the assessee has to appear before CIT and give his submission as well as the claims which he has made. After going through the claims, either the CIT might get satisfied and he will provide the relief, and he will continue the assessing officer's assessment order. If he is not satisfied with the submissions made, he might discard the assessment order and he will instruct the assessing officer to initiate the fresh proceedings. And those fresh proceedings are either as a whole or it might be as a part. I mean, surrounding around the particular issue, and that can be done by the CIT. Now, the assessing officer has to go back again to the assessee has to again go back to the assessing officer for getting that particular point reviewed in a fresh assessment proceeding. Just like I have said in the earlier that if the assessment is initiated on the instructions of CIT appeals, there is a time limit. Similarly, in this case also there is a time limit, and the fresh assessment needs to be completed within that particular time limit only. It cannot go beyond that, otherwise it will become an invalid assessment, a fresh assessment. Now, in this case also, assessee has one remedy. Assessee can go to Income Tax Appellate Tribunal against such an order passed by the CIT for re-initiating or fresh scrutiny proceedings by the assessee. So please understand that CIT can only direct the assessing officer to re-initiate the scrutiny proceeding, fresh proceedings on the particular matter. If the assessee is not satisfied with the view of CIT under Section 263, in that case, assessee can go to the Income Tax Tribunal against that view taken by the CIT. He can even challenge the legality and validity of the 263 proceedings. Those are a revision proceeding or review proceedings. And in that case, assessee has to prove that the matter has already been discussed by the assessee in the original assessment. The opinion formed by the assessing officer was on the basis of legitimate submissions and documents in accordance with the provisions of law prevailing at that particular time, and therefore there is no loss to the revenue, or there are no lacunas to the inquiries made by the assessing officer for which the fresh assessment has been directed by the CIT, and all those grounds can be taken. So simultaneously, there are two proceedings are going on. If 263 is involved, one is at the tribunal, which is challenging the legality and whole existence of the 263 proceedings, and second is at the scrutiny level, in accordance with the directions issued by CIT. So, in scrutiny, the assessing officer again has to go with all the documents and submissions on which the CIT is pressing upon, and he has to finalize his assessment order or has to modify his assessment order again. If he is again satisfied, he can give relief to the assessee. If he is not, he can then decide against the assessee. Now, all the proceedings up to the level of reaching tribunal have been discussed. Only one proceeding remained, and that is of charity commissioner. That is CIT exemption. So, any decision taken by CIT exemption for approval or rejection of trust recognition under Section 12A or 80G of the Income Tax Act, that can be challenged only at Income Tax Appellate Tribunal's level. That cannot be challenged at the level of CIT appeals. If any normal scrutiny proceeding is going on, that can be in case of a trust, it can be challenged before CIT appeals. But if it is a matter of registration under Section 12AB or under Section 80G of the Income Tax Act for a particular trust, in that case, the remedy is lying only at the level of appellate tribunal and not before the CIT appeals. With that, coming to the level of CIT appeals, the level of Income Tax Appellate Tribunal. Now, please understand, once you have received all the orders, either it might be under Section 263 from CIT, it might be a CIT appeals order, or it might be order of CIT exemption rejecting the registration under Section 12AB or 80G. The time limit for filing an application before Income Tax Appellate Tribunal is 60 days from receipt of those particulars order. Beyond 60 days, you ideally cannot go. However, the delay can be condoned depending upon the reason which you are furnishing. The reason should be legitimate and should be acceptable to the Income Tax Appellate Tribunal. Very recently, there were a number of cases under Section 234E of the Income Tax Act for delay in filing of tedious returns. They have imposed rupees 200 per day late filing fees under Section 234E. The original amendment has been introduced in the Act in year 2012. However, the enabling amendment was not made under Section 201. Therefore, and the same has been made in the budget of 2015, and it was having effect from 1st of June 2015. Therefore, there were litigations involved around this particular ambiguity as to from 2012 up to 2015, if there are delays in filing the return of income, whether this 200 rupees per day late filing fee can be imposed on the assessee or not. The Bombay High Court has specifically decided that this late filing fee shall not be imposed on the assessee. However, the assessee was not at all aware of the fact that the tedious proceedings or the tedious communication, the department has already imposed such penalty in their returns. Those were getting conveyed to them in the year 2019, 2020, 21, somewhere else. I mean, some later period when actually the SSC has received demand letter from the department, from the TDS section. The SSC came to know that those late filing fees were imposed to them. They were completely unaware of that. Initially, the tribunal has condoned the delay. CIT appeal was not at all inclined to condone the delay as to, I mean, the only stand taken before the authorities was we were not at all aware of such demand raised. And whenever the demand notice received, we immediately followed up it by filing an appeal before CIT appeal. So there were delay of 3 years, 4 years, 5 years. Some cases it was a delay of 8 years also. Initially, tribunal was very lenient that, and they were accepting the claims of the SSC under the guidance of the one Supreme Court decision in several cases that if the technically there are merits in the case, then the delay ground shall be disregarded or it can be ignored. However, very recently, the tribunals have started taking a view that the delay is of a substantial nature and such a huge delay cannot be condoned. And therefore, they have started dismissing the appeals. So please understand, lack of knowledge of a particular thing or such kind of a grounds can be tenable up to certain period, but for a larger period of time, tribunals have started taking the views against this thing. Therefore, you can whatever reason you are providing to for this delay, it has to be very legitimate and convincing. If you are raising a medical ground, you have to provide the supporting documents, the medical bills and prescriptions and the reports and all those things. If the medical ground is not of you, but for some family members, you have to provide that. If it is some other business issues, you have to substantiate with some documentation or some other things as to why uh, the delay has been caused on all those matters. And accordingly, the courts, that is the tribunal, can decide whether to condone the delay or not. In practicality, if the delay is of very short time, that is a day or two, or let's say up to maximum of 30 days, the tribunal are very lenient to condone the delay. Uh, I mean, I should say on a humanitarian ground, so there can be possibilities, but otherwise you have to substantiate. There have been cases where the revenue has raised objections or the SSC has raised objection on revenue side delay in filing the appeal for a very shorter period of time also. And there have been many cases for these delays and all. So most importantly, coming again to the main proceeding, let's say the delay has been condoned and now the original matter has put up on the board. Now you have to appear in the tribunal. Like tribunal is the open court, like other civil and criminal matters going on in the open court. Tribunal also function in that way. Strictly speaking, it is at par with the High Court, but whatever happens in the tribunal is getting challenged at the High Court. And again, most important thing is at the level of tribunal also. If you feel certain documents are crucial to the case and were not produced before the lower authorities, you can submit it as an additional evidence before tribunal also. The only thing which you have to do is you have to again substantiate the reason as to why you failed to produce these documents before the lower authorities, that is the assessing officer as well as CIT appeals. Tribunal will not accept it very easily to permit you to file these additional evidences. So it is very you have to be very much confirm. The reason must be very solid why you could not submit it to the lower authorities, and then you can the tribunal can permit you to file the additional evidences. Now again, the tribunal is the last fact-finding authority. So they will discuss upon the facts, they will discuss upon the legal issues, and then they will form their opinion and can give the order or a judgment upon the particular issue. However, if you are filing an additional evidence which was not produced before the lower authorities, in that case, it might be possible that tribunal may ask you to go back to the office of assessing officer or CIT appeals, whichever or whatever they feels right. And then again, the another level or another round of scrutiny proceedings will be initiated. Supposedly, you haven't filed any additional evidence. In that case, you can make an argument before the income tax appellate tribunal on the issues involved in the order of CIT appeals. Let's take an example. The order of CIT appeal is against you, then you have to, then the tribunal will hear you first as you have filed an appeal. And subsequently, there will be a department's representative in the tribunal who will counter your views on whatever grounds you have raised and whatever arguments you have made. Then again, you have an opportunity to rebut the statements made by the department's representative in the tribunal. After hearing all these things, then tribunal decide whether to grant you relief or not. And again, depending upon whatever documents you have submitted to them. So please ensure whatever claims you are making, you have to have the backup of documents with you. Otherwise, merely making submissions long and long, running into several pages submissions will not help if there is no documentary proof attached to it. Further, after supposedly again, if the CIT appeals order is in favor of you and department has gone into appeals, in that case, department will be given a chance to represent first. After their arguments, then you are having as an assessee's representative an opportunity to say on the department's submission and arguments. Then again, there will be a rebuttal from the department side, and then the tribunal will decide what to do. Further, there could be a possibility that on appeal filed by any of the party, the other party can raise a cross objection to that, and those cross objections will also be entertained by the tribunal. Now, after looking into all the matters, after looking all the submissions and documents, and the legal establishment, the case laws and precedences set by various other tribunals or High Court or Supreme Court on the similar issue, or if it is a new issue, then tribunal will apply its own mind. There are judicial members and accountant members, and all those judges will apply their own minds, and then they will decide whether to provide you a relief or not. Further, like there is a remedy of rectification available at the time of summary assessment, that is intimation, or you can also apply for rectification application for assessment order for the original assessment. Similarly, if there is any mistake apparent from the order of income tax appellate tribunal, you can file a miscellaneous application against such a mistake which could be located from the ITAT's order. And such kind of an application can be made within 6 months from the end of the month in which the order of ITAT has been received by the assessee. Then the tribunal's bench sit upon to discuss this particular issue, and the said issue can be adjudicated by the tribunal. Further, tribunal, just like I said, the stay proceedings can also be entertained by the tribunal. Similarly, those stay proceedings are granted initially for 6 months period, and later that can be extended up to further some period of time, but not full-fledgedly till the conclusion of the ongoing litigation proceedings. The tribunal also cannot grant stay for the whole period. Further, if any order of the tribunal has been given and it is in favor of the SSE, but it is not acceptable to the revenue can go to the high courts. Or if it is against the SSE and SSE is very firm with his own stand, in that case, the SSE has a liberty to approach before the High Court for further proceedings. Now, please understand, the tribunal is the last fact-finding authority. So, for any of the factual mistakes or factual interpretations made by the tribunal, you cannot go against those issues before the High Court. Before High Court, you can go only for such issues which are having a legal question of law involved. There cannot be any argument about the factual metrics happening at the High Court level. Those all discussions will be taking place at the time of at the maximum at the time of ITAT proceedings only, or the lower authority, or before the lower authorities, but it will not happen at tribunal level. Sorry, High Court level. The time limit for filing an appeal or application against the order of tribunal before High Court is 120 days. Within 120 days from the receipt of order of tribunal's order, ITD. And then after, initially, the court will sit and decide whether the appeal can be admitted or not. If there is a question of law involved, then they will admit the appeal. And if it is not having any question of law, they will reject the application at the time of admission only. Supposedly, it is getting admitted, then it will go for actual adjudication, and then they will decide whether this application can be accepted or not. There again, the question of law will be decided under the light of the provisions of Income Tax Act, various other precedences set by the High Court, Supreme Courts, and various other commentaries and all those things. It might be involving a domestic courts, or some, if there are certain issues, certain interpretations could be made. In that case, some international courts decisions were also being referred in the High Court proceedings, and again it will be referred by the lawyers to the court, and court will deliberate upon those things and then decide the issue. Further, if the court feels necessary that some more adjudication is needed, they might send those things back to the file of the lower authorities. It might be assessing officer or CIT appeals or tribunal or anything. And then ultimately, if again the matter is decided in favor of SSE and revenue is firm on their stand, revenue could go to Supreme Court. If it is in favor of revenue, SSE can go in the Supreme Court. Supreme Court, again, there is a time limit of 120 days from the order of High Court. And in Supreme Court, there are 2-3 ways with which we can approach. One is the normal proceedings, against the regular order of tribunal or High Court. Sorry. And the other way is a special leave petition with which you can approach. Before High Court also, you can approach with writ petition instead of regular income tax appeal. And that can be adjudicated on various grounds and various ways in the High Court as well as Supreme Court. And now the Supreme Court is the last supreme authority. Therefore, whatever they decide becomes the law, until and unless the CBDT or legislature is turning around the provisions of Income Tax Act in such a way that the effect given by the order of Supreme Court will be nullified. A latest example I could foresee is of the Vodafone judgment of 2012, wherein the issue has been decided in favor of the Vodafone by the Supreme Court by Justice Kapadia. However, immediately in the subsequent budget, n number of retrospective amendments were introduced in the form of clarifications and explanations under Section 9 of the Income Tax Act, so that whatever decision has been given in case of Vodafone could be turned around in totality to make them pay the taxes in India. But under the larger bench and all those things, the pressures, international pressures, somehow government in 2019 or 2020 has taken back those amendments because those were retrospective, and there were decisions priorly also as to any amendment which is against the which is not in favor of the SSE. I won't say against, um, which is not in favor of the SSE. In that case, such amendment cannot be imposed retrospectively. Similarly, if there are opinions of two different high courts in two different ways, so the matter is same, but one high court has given decision in favor of SSE, the other high court has given decision in favor of the revenue. In that case, there is a decision of vegetable products of Supreme Court. In that, they have said that whatever decisions favors the SSE, that will prevail, and the decision which is against the SSE will not prevail in such kind of a situation, subject to a condition that it should not, those high courts should not be the jurisdictional high courts under which the SSE is getting tried. So let's take an example. We are in Maharashtra. The jurisdictional high court is Bombay High Court. If Bombay High Courts have decided in favor of revenue, then irrespective of the fact that the Gujarat High Court has decided in favor of SSE, it won't matter. All the SSEs in the jurisdictional area of Bombay High Court have to follow the decision of Bombay High Court only. But let's say we are in Maharashtra, the similar topic was not at all discussed in Bombay High Court. And however, it is discussed by Gujarat High Court or let's say Calcutta High Court, and the opinions are different. In that case, whatever is in favor of the SSE needs to be taken into consideration, and the relief needs to be provided to the SSE. That are the precedences set at the High Court level, and for Supreme Court, we are very well aware that whatever Supreme Court decides become the law of land. Therefore, there will not be any further arguments on that. If the similar matter is involved at the lower authorities, then they have to follow the Supreme Court decision and have to act upon that. So, accordingly, from my side, I think what the world after filing the income tax return, I have tried to comply or explain those things. I hope I could do my task satisfactorily to all of you. And over to Nidhi. That's it from my side. If there are any questions, do let me know on my email also. I think it will be shared to the participants.
Thank you for your detailed guidance on tax litigation, sir. Your expertise and the clarity you provided on the details of post-filing ITR procedures and its litigation truly made this session enlightening and insightful. Your knowledge and explanations have shed light on a complex topic, making it much more easier to navigate. Now, I would like to invite Mr. Amol Bhosle to deliver vote of thanks.
Thank you, Nidhi. Good morning, everyone. Myself, Amol Bhosle, on behalf of the Pune Vikasa branch. I would like to extend our heartfelt gratitude to Dhiraj sir for sharing such an insightful knowledge on the tax litigation with us. Thank you, sir, as explaining complex concept in simplicity and providing practical example of partnership firm, also explaining the hierarchy of appeal filing assessing officers. And I would also thank you to CA Rushikesh sir for joining us.
Yes.
And I would also like to express our appreciation to all the participation from the Ahmedabad branch, Dhule, Nanded, Pimpri Chinchwad, Sangli, Satara, Surat, Wasi branch of Vikasa ICI. for their active involvement and thoughtfully contribution, making this session engaging and productive one. Lastly, also thank you to Nidhi Mandewal for giving amazing introduction. Lastly, special thank you to organizing committee and everyone involved in this session. Thank you, sir.
Thank you. And a good day.